In the metals quadrant today, taking a look at the September copper contract, which finished lower today, but it was a reversal lower. Copper actually reached its highest price level since June 22nd, then turned negative, the first down session that we've had in copper in the last 6. On the upside today, we're actually up almost 1% today. 4.6275 was the high in the September contract. On the downside, down about 1.75%, 4.50 and a half. 4.5590 was the close. It was down a little bit more than 0.5%. But on the lows today, as I mentioned, down about 1.75%. We have the first down session in the last 6 for copper. Now, there's been a sell-off in China. Some very big concerns about the Chinese economy, about Chinese assets. U.S. funds are rumored to be selling China and Hong Kong assets, and that could affect the Chinese economy, which could directly affect the demand for copper. And that's likely where some of this weakness is coming from. The Hang Seng Tech Index plunged as much as 10.78% in the last 3 days, from high to low, due to the Chinese government pressuring their own tech firms, and then strained relations with the U.S. continue. So certainly no relief on that front for the Chinese government, for the Chinese economy. Chinese year-to-date industrial profits were way down from 83.4% to 66.9%. Those Chinese industrial profits represent the actual profit margin of government-owned and small private Chinese industrial companies. So not a lot of copper purchasing going on there for those profits to be shrinking, or at least the price of copper, having been up as much as it is in 2021, has affected those profits. So overall, it's a weaker demand story. Now, speaking of weakness, there was dollar weakness today as well, and it's surprising that copper continued lower, probably why copper recovered a little bit later in the session from that down 1.75. The dollar weakened versus the euro by 21 basis points, versus the pound by a little less than 0.5%, especially versus the yen by 61 basis points, which, when you count the reduction in U.S. Treasury yields, so higher prices, lower yields, and the rally that we saw in the yen by 61 basis points, that could be a little bit of flight to safety going on when you look at the stock market sell-off that we got today.